Hello everyone, what's going on? One massive update is coming from NIO's and one of its subsidiary has just increased its registered capital more than tenfold. A pretty striking move. What does this tell us about NIO's strategy, its energy infrastructure business, and its potential growth? That's what we will unpack. By the end, I will also share why I believe this could be a good news for investors with a long-term horizon. So let's get started. The company in question is Nanjing NIO Energy Limited, a subsidiary of NIO. It has boosted its registered capital from 20 million yuan to around 250 million yuan. That's an increase of about 1150%. Nanjing NIO Energy is wholly owned by Wuhan NIO Energy, which in turn is fully controlled by NIO Energy Investment Hubei, also known as NIO Power. The business scope of this subsidiary include things like planning, design, R&D, construction, sales and operations of intelligent systems for electric vehicle, plus construction and management of charging and battery swap facilities. NIO has been aggressively investing in its battery swap and charging infrastructure as a part of its ecosystem. The subsidiary in question is directly involved in that domain. Initially, NIO planned to open 2,000 new battery swap stations in China this year, but earlier this year it slightly reduced that target to a range between 1800 to 2000. As of the date of reporting, NIO has built 494 new battery swap sites in China, roughly 27.4% of the lower end of its target for the year. So there's been progress, but also some shortfall is hitting the target. Beside this capital boost of Nanjing subsidiary, there has been other moves. For example, Wuhan New Energy more than double its registered capital earlier in 2025 from 784 million to 1.784 billion yuan. So the question here is that why this move of increasing capital by more than tenfold be noteworthy. Here are some of the reasons, what it signals and where the levers for the growth might lie. First one is signal of seriousness and commitment. When a subsidy boosts its capital by this much, it's a strong signal that the parent company NIO is placing high priority on that part of its business. Here, energy infrastructure, battery swapping, charging, intelligence system, it's not just lip service. They are injecting real financial resources. Second one is ability to scale infrastructure faster. More registered capital means more capacity to build, more flexibility to invest in R&D, more ability to commit to contract, higher setup operations. Scaling up battery swap stations and charging infrastructure require upfront investment in hardware, sites, grid connection, and maintenance, etc. Third reason is potential improvement in unit economics. As number of swap charging stations increase, fixed costs spread out, utilization improve, network effect may kick in. Also, intelligent systems become more valuable with scale. Fourth one is competitive positioning. EV makers are not just car manufacturers. Increasingly, the value chain include energy service, after sales infrastructure. Companies that own or control charging swapping infrastructure can differentiate themselves. For customers, range anxiety, charging convenience, swapping speed are become more important. Also, this capital boosting likely makes it easier to partner, raise future funds and negotiate supplier contracts. In summary, this more than tenfold increase in registered capital at Nanjiang Neo Energy is not just headline money. It tells us that NIO is doubling down on its energy infrastructure side of its business by putting real capital behind the battery swapping, charging intelligence system. NIO is signaling that it sees this as a core piece of its competitive advantage. Yes, there are risks, heavy upfront cost, competition, execution challenges, but the tailwinds are strong. The EV market is growing. Consumers increasingly care about charging, swapping, convenient regulatory support is often there, and infrastructure scale tend to produce cost benefit and network effect. For investors, I believe this is a positive move. It strengthens NIO ecosystem, potentially improves margin long term and support the brand and customer promise of convenient, intelligent EV ownership. Here, I believe that after its subsidiary NIO main brand will also turn profitable. Recently, CEO said that in fourth quarter company will turn profitable. Then we will add revenue from all the sites in NIO's balance sheet, and because of that, we will see a big spike in its stock price. Seems like NIO is back on the track. You might have seen a lot of headlines about dilution and downward pressure it put on the stock price, and it's true, it did. In fact, this is what a lot of people were saying: a quick simple narrative. NIO is diluting its stock, which means there are more shares on the market, and that typically pushes the price down, and for a while that exactly what we saw. The stock was feeling the heat and investor sentiment was taking a hit too. It's classic case of supply and demand, and in this situation the increased supply of shares was winning. But now everything is right and NIO is above $7 at 6.50. I think dilution happened and now the stock has crossed that area. But here's where the story gets really interesting. While many people were focused on short term pain of dilution, they missed the crucial part of the strategy. That dilution was part of the bigger plan to strengthen NIO balance sheet. Think of it like a company taking out a loan to pay off debt and invest in its future. It might feel like a setback in the short term, but it can lead to massive gains down the line. And that is what exactly happened. By shorting up their finances, NIO was able to give investors something incredibly valuable: confidence. Suddenly, the narrative wasn't about struggling company diluting its stock. It was about a company making a strategic move to ensure its long-term health and stability. Investors started to see the bigger picture, and then when the things started to change, the market began to price the stock in improved financial outlook, not just dilution. We saw a shift in investor sentiment, and that positive energy had a direct impact on the stock valuation. And as we have seen, that has led to a significant rally. The price has ramped higher, and it's perfect example of how a company fundamentals can eventually overcome short-term market noise. This whole experience with NIO is a great lesson for all of us. Don't just focus on a single piece of bad news. Instead, look at the entire picture. Understand the why behind a company's action, because often what looks like a setback in the moment is actually the first step towards a powerful comeback. And that is what exactly we are seeing it here. Analysts are saying that this momentum will continue cause company recently has got more than 100,000 cancellation orders for their new ESA. This is going to add a big chunk of revenue for the company, and because of this we will see further momentum in its stock price as well. So get ready for it. With that said, thank you so much for being here. See you in next one.